shares of Kratos Defense and Security Solutions have exploded, delivering a staggering 258% return this year. But after such a massive run, investors are asking one critical question: what's really driving this growth? And is there any fuel left in the tank? In this video, we're going beyond the headlines for a comprehensive deep dive. We'll break down the three core pillars of the Kratos story: the stunning financial results, the breakthrough technologies that are turning heads at the Pentagon, and the high-stakes Wall Street debate that every investor needs to understand. Let's start with the foundation, the financials. Kratos' third-quarter results weren't just good. They were a clear statement of accelerating strength. Revenue surged 26% year-over-year, crushing estimates. More importantly, earnings beat expectations by over 16%, proving this growth is translating to the bottom line. But the most vital sign for a defense contractor is its book-to-bill ratio. Kratos reported a robust 1.2 to 1. This means for every dollar of revenue they delivered, they booked $1.20 in new orders. This consistent demand pushed their total backlog to a massive $1.18 billion. This powerful performance led management to do one thing that Wall Street loves: raise their guidance. The upgraded forecast for 2025 signals that the company's momentum isn't slowing down. However, Kratos isn't just a financial story. It's a technology story. Recent breakthroughs prove they are a leader in the future of defense systems. First, the GK800 turbofan engine, developed in partnership with GE Aerospace. This engine successfully passed critical altitude testing, validating its performance. This isn't just a component. It's the core power plant for next-generation unmanned systems, positioning Kratos at the heart of high-value propulsion technology. Second, and even more significant, is the Ragnarok low-cost cruise missile. Kratos unveiled a production-ready system with a 500 nautical mile range. The key innovation is its focus on affordability. In modern warfare, the ability to deploy sophisticated, high-volume firepower without a massive price tag is a game-changer. Ragnarok is a direct answer to that need. And these aren't one-off projects. A recent $68 million contract for a hypersonic testing facility and a $175 million award for Navy radar systems show that Kratos' technological expertise is being recognized across multiple critical domains. The third pillar is the most forward-looking, and it's the foundation of the entire bull case: the record $13 billion contract pipeline. This is not yet revenue. It's a massive reservoir of potential future contracts that represents multi-year growth visibility. Kratos is uniquely positioned to capture this work. They hold sole source, first-to-market positions in areas like tactical drones. They are also deeply embedded in the Pentagon's highest priorities: unmanned systems, space technology, and missile defense, all areas seeing historic budget increases. This incredible run-up has created a fierce battle on Wall Street, with analysts sharply divided on the stock's future. The bulls are extraordinarily optimistic. Firms like Truist, with a $125 target, and Stifel, with a $112 target, see Kratos as a unique asset. They believe the company's technology moat and exposure to generational defense spending will drive revenue and margins higher for years to come. The bears, however, are urging caution. They point out the stock is trading well above the average analyst price target. Their main concerns are valuation and cash flow. Kratos is expected to use up to $105 million in free cash flow this year to fund its growth. The bear argument is that the stock is priced for perfection, and any delay in converting that $13 billion pipeline into firm contracts could lead to a sharp pullback. So, after examining all the evidence, what is the final verdict for investors? The Kratos investment thesis is clear and high stakes. You are betting that the company's years of investment and innovation will now pay off as they convert their massive $13 billion pipeline into long-term, profitable production contracts. The catalysts are clear. Watch for major contract wins for systems like the Valkyrie drone or Ragnarok missile, and monitor the company's progress toward positive free cash flow. The risks are equally clear: contract delays, execution missteps, and a high valuation that leaves little room for error. In conclusion, Kratos Defense is a compelling, high-growth story with proven technology and a seemingly limitless opportunity. The recent quarter confirms the momentum is real. However, it is not a risk-free story. The stock's spectacular run means future returns are now tightly linked to the company's ability to execute flawlessly. For investors, the coming quarters will be all about watching that $13 billion pipeline turn into concrete reality.